Welcome to the DWS Market Update. A very exciting 2025 is coming to an end. Trade wars and geopolitical uncertainties dominated the news, as did ever-new superlatives in artificial intelligence. Given the high level of uncertainty, the global economy has proven to be extremely resilient. We recently set our outlook for economic development in 2026 at our Economic CIO Day and would like to share the results with you. In the US, growth has been significantly more robust than initially expected. We anticipate growth rates of 1.9% for 25 and 2.1% for 26. Thus, the US is growing roughly in line with its potential. A slight weakening in the labor market should be largely compensated by strong investment momentum. Inflation and debt issues remain on the agenda but do not dominate. Accordingly, we expect 3 more interest rate cuts by the US Federal Reserve to 3 to 3.25% by the end of 26. European economies also experienced a turbulent 25. On one hand, France is suffering from political instability and an overstretched budget situation. On the other hand, Germany is implementing an unexpectedly large fiscal program for defense and infrastructure. A cautious improvement in manufacturing lets us expect overall growth in the Eurozone of 1.4% for 25 and 1.1% for 26. Thus, growth should be above potential in both years. The inflation rate also remains moderate and is expected around 2% in 26. Given this fairly balanced starting position, we do not expect any further interest rate cuts from the European Central Bank. The deposit rate is likely to remain at 2%. So, can we sit back and just watch returns roll into our portfolios? Hardly. In all regions, there are enough risks that could stand in the way of our positive forecasts. In the US, we are closely monitoring further development of migration, which provided additional growth impulses, especially during Biden's term. On this side of the Atlantic, all eyes will be on the implementation of the planned infrastructure measures in Germany. Only if the high expenditures are accompanied by structural reforms can the fiscal stimulus unfold its full effect. As you can see, things will remain exciting. That's it for today. Thank you for your attention and goodbye until next time.